Ask any of your favorite traders, how do you know a good entry? And they'll tell you, oh, it depends on the scenario. Nobody has like a real clear cut answer, right? I'm not gonna give you the clearest answer as well too, because it is a case by case scenario. But what I will tell you is, if you want quote unquote confirmation, you're gonna sacrifice a couple cents on the premium, if that makes any sense. You pay for confirmation in the market. Does everybody understand what I mean?
Style of your
And
personal
by
trade
paying, I
where you
mean you
would
pay
say
a higher
yes, this
premium
is
price, right? So
fantastic
you
of a
won't
trade.
get the
You can
best
make
fill in the
money in
world, but
space.
maybe
You'll
you'll get
have
peace of
losers, you'll
mind
have
that
losing
you're
trades, you'll have losing
starting off the
days.
trade and it's going to
Completely
work in your
normal.
favor. But
If your system is
entry
intact,
signals for me, on this trade personally, what I was waiting for was, okay, we had this huge push down, right? 950 came in. I thought this was a news candle. CJ let me know that that was just very aggressive candle, right? So price delivery was just fucking smooth today, very aggressive, right? Trade back up into it, first attempt, right? Trade more than 50% of this gap, more than half, right? So I'm looking to short. At this instance, when this was a full body green candle and we wick down and this one opens red and starts pushing, I'm 9 times out of 10, 10 times out of 10, I'm short, right? Now, you would say, okay, where would you place your stop? I wouldn't place it above these highs because on a contract premium, I would have gotten smoked. So this is what I mean. And you know how Marsh, do you remember that question you asked me about, okay, what about this daily fair value gap much lower on ES?
Yep.
What I would do here is I would use this as my stop loss, aka my resistance, right? So if I'm shorting here around 412, 411.95, whatever the case may be, this is a 50 cent move against me, right? This like resistance level, this other gap, that would be my stop. Had we had continued to trade higher and took this out, maybe I would look for a re-entry if we took out these highs. But this is all hypothetical. The trade worked out smooth. But if somebody was to ask me what would be your stop loss on this trade, you would place it here. I would use this, FVG as a level of resistance and also a dynamic stop loss. What do I mean by dynamic stop loss? Is that it's not a level, it's more so a zone. So I hate that I'm using big words with you guys, but entry
Hey,
for me, I didn't take this re-entry. I thought it was a bit dodgy, to be honest. We probably could have gotten a round two on this one. Then you have these equal highs, right? They probably got taken out later in the day. They did. Really choppy day, to be honest. I wasn't around for the late day action, but I want you guys to do a little bit of homework tonight, and we'll make a little homework tab. Is annotate your charts the right way. It could be on Thinkorswim, it could be on TradingView, it could be on Webull, whatever you like to use. Really focus in on the different types of contract charts and what you could have played, what would have been your ideal entry, what would have been your scale out points. That's what I want to be your first homework for the night. So after this lesson is done, I'm gonna jump on really quick with Andrew and Marsh, and we're gonna make a homework tab. So I'm gonna make dates for it, like okay, homework assigned Tuesday, May 16th. It's due next lesson, right? So just a little bit of work. I want you guys to become more familiar with how premiums move. Now, the best way to learn is to watch it in real time, but there's no shame in back testing, to be honest. Like, honestly, sometimes on the weekends, it'll be Saturday morning, I'm not doing shit. Sometimes I'll just back test my own signals, see what I saw, why did I scale out here, could I have held it longer? That's really how you polish and you get better, right? It's cool to have a winning trade, it's cool to make money, but what's really cool is when you can repeatedly make money. It's not a fluke, right? It's when you can consistently do it on a day-to-day basis. So,
hey, Rippy.
what's up, brother?
Hey, I have a question, man. What other confluence do we follow besides? I'm looking at the 946 candle, right
Nine.
before it pivots. What other confluence are we looking at, or what other direction are we taking to understand that the market's going to move down and not move higher? I mean, is the liquidity sweep the only thing that gives us the confidence to say, okay, well, this move is going to continue down instead of bounce back up?
The liquidity sweeps, Eco, that's a great question too. It's based upon the multi-time frame analysis, right? So today, the reason the first short was very aggressive for me was because I played this opening range breakout, right? So this level of liquidity here, just from this 932 candle, We finally broke out of that range, and it was only a range of consolidation for about 13 minutes. Market opens at 9:30. We had our breakout 9:43. Really wasn't sustained at all. You could have played that breakout for 2 minutes if you're a scalper, but I look to short a lot of breakouts, right? I used to be a breakout trader, and what I would notice too is, you can only scalp for 10-15%. You have to be very aggressive. A lot of my friends trade like that. Like one of my really good buddies, he mostly plays breakouts. You have to understand that most breakouts are just like money grabs. They're not really like a sustained breakout, unless you have a news catalyst or you have
Hmm.
something moving it, some other outside factor that can sustainably move that stock or crypto, whatever the equity or commodity is it is you're trading. So for today's instance, the only confluence that I would really, in hindsight, be looking at is you do have this gap that was, filled. You do have this opening range breakout. Once we took out this swing low right here, which I'll draw right here. Let me clean up the chart so I don't want to make it too complicated. So once we broke this swing low right here, right, there is your like quote unquote your trend shift, your break of structure, whatever that you want to call it.
Hmm.
Your idea there should be where can I find an optimal trade entry to go short, right? We come down, sweep these lows, we make a new low here. The market will pop back up, retest this FVG, this displacement box, and look to clean up this low again, right? So when I'm telling you guys the ideology of ICT is really like polishing up and cleaning up after like you're dropping quarters, you're coming back and you're picking them up. It's a break and retest strategy. It's a very polished version of that. It's a very fancy schmancy way of saying a break and a retest. You just need to have your target in mind, right? And you can use his concepts really well with your targets, but you need to have your target predetermined before you enter the trade, right? So when you have this break of structure to answer your question, this is where your mind flips to go short. If you miss this initial short here, which is completely fine, there wasn't really the best entry. It was very aggressive. You wait for it to do what it needs to do, right? Bounce back up, consolidate for a second, trade back into your FVG, trade back into your displacement box. Take a low risk short there, right? The entry on the premium chart was very clean. Have your target of this low that was left unbreached, right? There is your target to trim and sell. Because the way I fully understood ICT, the way I fully started resonating with it was being a breakout trader, right? Let's just clean up the chart completely. We need to sometimes think from other traders' standpoint, right? And the reason I don't like ICT kids is they'll say like, "Oh, retail traders probably did this." Like my brother, at the end of the day, we're all retail traders. Like I'm not trading a $1 billion portfolio, right? So we're all retail, we're all the same. Like relax, right? So sometimes they have the notion that they're just better than everybody else. It's an ego complex. So with that being said, the way that I was taught, right, whether it's YouTube or how I used to trade, is okay, this is my support level, this low, right? Once we break this below this low, I'm gonna look to go short. Once you break support, the way you're taught in books, the way YouTube teaches you, the way a lot of other people teach you, whatever, they'll say that okay, support is the floor, resistance is the ceiling, right? When you break resistance, your next goal is the next. When you break the upper floor, your next target is the next floor, right? If you think about that ideology, it's just a money grab, to be honest. Most people that chase short down here, they're getting stopped, right? And the market is just taking their short, taking their liquidity here, reversing it back on them. So sometimes it's good to think about the wrong ways to trade to polish up your strategy, if that makes any sense. Don't confuse yourself, but look at the market subjectively as to why some people would go short here, why some people will go long here, right? And then in hindsight is good sometimes because you can narrate it in your own head. You can think about the ways you used to trade, the way you trade now, what's working, what didn't, why did it work today, why did it not work today. That's why trading is a very subjective sport. A lot of people can make money a lot of different ways. Like I was just telling you guys about the opening range breakout, right? When you have a sustained breakout either side of the range, you could have made maybe 20-30% on this push on a 0 day. If you have good risk management, if you have good trade management, you could just take that and call it a day. You don't need to trade this smart money, whatever whatever you want to call this, right? There's no right or wrong way to trade. That's why I'll never put anybody else down. My way, not even my way, just the way we prefer right now, it really works well for me. I understand it well. I can repeat it well. I can explain it well. So it's what I'm rocking with right now. 1 year from now, if the market changes and the strategy needs to be tweaked a little bit, we'll adapt and pivot. But for right now, it's been serving us very, very well, and I'm very confident in it. That's the main priority, right? That's the main importance at the end of the day. It's not about ego. It's about what's working, what's not, what's paying my bills, and what's noise. So I think I got sidetracked on your question, but hopefully that answered it too.
Yeah, no, you straight up answered it. Because I think that's what my problem was, being hesitant on those breakout trades. So,
Yeah.
like the one we're seeing now is going in a positive up direction. So I'm looking for a small retracement and then thinking that it's going to continue. But looking at the 1 minute chart, once I see that 947 candle break that low,
Yeah.
that's a fast move. So I caught exactly what you were saying now. So now it makes perfect sense.
Yeah. And the thing is, the thing I like about this like smart money strategy, whatever, is you just let it come to you. When you're very, very calm in trading, and you guys will see this tomorrow when I live trade. I don't like to be crazy energy. Like I'll play some music maybe, but I'll just be chilling, right? If something goes really crazy, I'm not gonna get mad. I'm not gonna get frustrated. I'm just gonna let it do what it needs to do. If it comes into my spot, if it comes into the spot I like, if it's doing what I like on the premium chart as well, I'm not gonna hesitate to take it. You guys will hear my fill. I'll tell you guys exactly what am I doing, narrating it. You could ask questions too. Don't worry about that. But you just let it come to you. You don't have to like rush and chase after this and be the most active trader. Most of trading is really just sitting there, to be honest. That's why like one of my greatest investments was I bought a very comfy chair for my desk so I could just recline and I could just let my alerts go off. When they go off, I just sit up and I focus, right? But besides that, I'm just monitoring the market and I'm just chilling. I'm scrolling on Twitter, messing around with you guys. I'm just having fun. Um, Most of trading is just reaction. It's not really being super proactive and aggressive. Like you're not playing a contact sport. You're letting it come to your spot that you like, that you have well thought out and planned. You have your trap set up. Wait for the mouse to come to you. Don't go chasing after the mouse. You're not gonna catch the mouse. He's much faster than you, much more nimble. Think about setting up a mouse trap with cheese, right? You're not gonna run out there with the goddamn mouse trap. You might hit your thumb on it. I know that's a crazy example, but it's the first thing that came to mind on some Tom and Jerry shit. Um, Let it come to you, man. Set it up. Be patient. When it comes, it comes, and you just fully, fully take it. You take full advantage of it. And trade management is something that we're gonna stress a lot, and that's gonna be improved with, signals and live trading, execution, trial and error. It's a never-ending cycle of self-improvement, right? Whether it's execution, whether it's your analysis. My analysis, I keep it very, very simple. Sometimes I'll do it off the phone. Sometimes I'll do it, on the laptop, computer, whatever the case may be. It's not like I'm being cocky and I'm doing it on my phone. It's not like I'm being lazy too. It's just that I've looked at the charts for so much. I know what works for me. I know exactly what I'm looking for. I have my alerts put on the night before. So you don't need to spend 3 hours on the charts. I always tell everybody that. When you know what to look for, when you know what works, set it up, set your alerts, do the little bit of work, little 30 minutes at night before, do your homework. When it comes time to be in the field, you're ready, but you're just waiting. You're waiting for one side to get tapped. Do we have a shift in structure? Do we have a break? Do we have FVG to trade into? Where are my targets? Where's my stop? Buy the trade and just let it go, right? Once everything is planned like that, don't hesitate to buy and just let it go. Whether it's a discipline issue where you can't stop out in time or you're too stubborn, automate some of your trading. I don't mean get an AI robot. I mean, let's say you bought 5 contracts to SPY for 60 cents, right? I trade on Thinkorswim, so I'll tell you what works for me. I use Active Trader. You know, put in the order that if you bought them at 60 cents, you have a hard stop loss at 44 cents. So if you bought five times 14 cents a contract, It's close to like $60, give or take a couple of pennies. I think that's what is that 56 if my math is okay. 14 times 5, 56, something like that. So you're gonna risk $56. You have your take profits in place, right? Let the trade go. You already know what the outcome is gonna be. With slippage, you might lose $60. Accept that before you get into the trade. Fully accept that. Don't plan to lose, but have your worst case scenario in your head already planned out. That okay, if this trade goes completely shit as the fan, $60 is out my pocket, right? Whether that's a lot to you, whether that's pennies to you, your financial situation is your financial situation. It's none of my business. But when everything is planned out in that regard, the anxiety of trading leaves your body, right? You start thinking about it more about probabilities and less about jitterness and anxiousness and anxiety and fear and emotional train wreck, if that makes any sense. So plan everything out like this. What I'm gonna ask for you guys as homework, and I hope you do it, is go over today's action on the 1 minute. Just simple. The first, just this first sell off until 10:30 a.m. Right? Just the first hour of action. Go into the premium chart of. It doesn't matter if it's a 0 day contract. It could be next week's contract. What I focus on is the 0 days. I enjoy trading 0 days. Um, Go into different strikes. How did the 409s move? Take a screenshot, draw your displacement box, make your take profits, put your stop loss on. Do that with like 2 or 3 contracts. It's going to be tedious, it's going to be annoying, but this is what I really did to hone in on good trade management. There's nothing proprietary or secretive or like only Rippy could do it. He has a secret magic touch. I promise you guys, like you guys always give me the compliment. People on Twitter give me the compliments, but there's nothing special about me. I swear to God at all. I'm a regular ass person. Um, I just did the little tedious work of doing this shit, of going onto the contract charts late at night and just like trying to really understand why they move like that, right? Why they gain so much volume at this spot? Why did they move so crazy at this spot? When was the best time to buy these contracts, right? The thing that always drew me into options from the jump was in a given day, if you have a crazy ass range, you can see a contract on SPY go from 50 cents to fucking $4, $5, right? And if you think about the scalability of trading, I'm talking about $50 into $400. Like, it's insane with one contract, right? Obviously, you're not gonna hold for that long, but the range is there. It's not just like something where it's like overextended or it's oversold, right? Options move fucking bananas. So that's always been why they've been so interesting to me. So do that as your homework. I'll make a homework tab right after this with Marsh and Andrew. I really want you guys to just be genuine with your work. You could obviously ask a friend, but don't copy off somebody. Treat this like actual homework. Don't cheat yourself. Please don't cheat yourself, right? If somebody has a cleaner chart than you, it's fine, but don't just scroll there for the answer and bullshit with yourself, right? I'm gonna double check your homework, but you know on the inside in your heart that am I doing genuine work or am I fucking bullshitting? And you guys are investing in this, so I really hope you put that genuine effort. It's gonna just benefit you more than anybody. So that's just the homework for tonight. I just want to do a quick introductory lesson. If we do have time, if you guys aren't too tired, come up and introduce yourself. Say what's good to everybody. Where you from? Just a little meet and greet. I wanted to get to know you guys better too. Um, I'll post a chart too of what I'm looking at for tomorrow. We'll do live trading tomorrow as well, for sure. And yeah, homework is the main. I'm gonna actually text Andrew and Marshall right now. Let me mute for 1 second so I can remind myself. Give me 1 second. Okay, so I'm gonna remember that. But does anybody have any questions so far? Does anybody have any requests so far? Maybe we should add a tab. Anybody got anything for me? Any constructive criticism? Any feedback? Anything like that? Hyped to learn. I'm hyped to teach. Honestly, man, I never wanted a time crunch or like an 8 week program. I just wanted very genuine people, very enthusiastic people, and if we need to keep this going for a year, I promise after 5 months, if you guys are on monthly, I don't want your money. I just want you guys to focus, really, really give it an honest effort. Um, a year you can change so much. 6 months you could change so much. 3 months you could change so much. So I'm really gonna just keep on adding tabs and coming up with new ideas, keeping things fresh. But the homework tab, oh no, don't worry about it, brother. If you guys are tuning in at work, or maybe the wife or the girlfriend is asleep, just mine is asleep right now. To be honest, so I should lower my voice. I'm using her laptop right now. I'm not even at the house, but uh, if anything needs to be added to into this Discord, if you're looking for something else, if you have any questions, you can hit me up. But I want you guys to be very close with one another as well. It's just like a small community has always been something I've wanted, and I just want to go above and beyond for you guys. I don't want to be fucking. I don't want to be that person that's like, oh, 8 week boot camp, 4 week boot camp. You can't put a time crunch on self development and mastery, right? When you do things like that with a time crunch, you set yourself up for failure. And like my example with that is like there'll be some times where I'm going to on vacation, right? And I'm not in the best shape. So I want to just trim down for vacation. You'll go on a crazy diet, you'll go on a crazy gym routine. The moment you get back from vacation, you have no inspiration to work out. So never put a time crunch on anything, whether it's the gym, whether it's like, oh, I got to be in shape by this time. You can't do that. When you do the day to day shit, fucking Shinobi's in here's cocksuckers not on the mic, bro. Fuck him. No, I'm kidding. When you put a time crunch on things, I don't know. It's just no point to do that. So we're gonna keep improving the Discord. We're gonna keep improving, our trading, whatever needs to be done. Homework tab though, I'm gonna set an announcement for that. I want you guys to really, really do honest, genuine work. And tomorrow, let's get after it. So if you guys have questions for me, let me know. Hit me up, DM me, talk in the chat. But tomorrow when we have more time too, I know it's a little fucking I know it's a little late. I want everybody to just introduce themselves. You know what I mean? Whether it's on mic or just say what's up. So, we could all just be close and like brothers and sisters in here. So I'm gonna end it at that. My voice is shot. I hope you guys learned a little something today. We have a lot of work to do, to be honest. This was just a little glimpse. You know what I mean?
Hey, Ricky,
Um,
can you hear me?
hold on. I think somebody spoke. I can't really hear them.
Yeah, can you hear me, Ricky?
What's
This
up?
is
What's up,
Raghav.
Rog?
So a quick question. So when I'm playing you can hear me, right?
Kinda. It's a little bit iffy, but I'm paying attention.
Okay. So when I'm riding a trend, so if you see the highs of the range, the opening range,
Yeah.
this 949 candle touched, and yeah, there it consolidated a bit. So sometimes when I see those, I get out of the contract. But how do you know, like, what you see that the trend will continue further?
So you were in puts at this time, or you're saying that if you're in puts and you
If
see that,
if I'm on yeah, if I'm in puts at that time, so most of the times when I see some like if if we are seeing dump,
yeah,
when I see a green candle, then I get out
yeah.
completely. So how to stay in the cons, just
Oh,
just to ride the whole trend?
I understand what you're asking.
Yeah.
What you need to do in that instance is focus more on your position sizing, have everything planned out to a T. And then what I'm gonna also teach you guys about, which is not rocket science, it's not revolutionary, but it's having a trailing stop, right? Until your trailing stop hits and you're in control of a trade, there's no reason to get out. Let it keep running. Take your limiting beliefs on the market out too. That's like sometimes that's like fear. When you're inputs and you see a green candle or you see a pop, it just completely kills your whole plan. You need to stick to the plan. I know it sounds like very generic advice, but that's the God's honest truth.
So
Your
when I
plan,
do that, the thing is here, the contracts decay, right? So
yeah,
when I keep my stop at the same place, like when I take the trade,
yeah.
it will mess up the contracts. I'll be going into negative. So trailing stop works, yeah.
Let's
Um,
not let's not keep it too tight though. The stop as well. That's something that a lot of people get confused on is keeping their stop too tight. So at that point, it's more about position sizing, but a little bit of a wider stop. on keeping the stop too tight and not giving the trade a little bit of breathing room. Like we want to be very precise with our entries. That's my whole. That's what I enjoy doing a lot is being very precise, not seeing a lot of drawdown. But we want to also give the stop, if it were to hit, give it a little bit of breathing room, right? And the breathing room is determined on your position sizing. So your idea is right, your direction is right, Rog, but it's more about your execution at that point. And execution is something that don't worry right now if it's not the best, if it's not super amazing, that can always be improved and fixed. You know what I mean? But what needs to be done in that instance is you need to trust yourself more, to be honest. Because if you're in a puts play, you had reasons to get into those puts. One green candle on the 1 minute shouldn't change your whole plan. Stick to that plan until you're proven wrong. Stick to that plan until it completely reverses, until the market completely decides to take you out. Anything in between that, Rog, is noise. Like there's been some trades. I got unlucky the other day with a bad signal, but there's been a trade. I'll send the Twitter post. I was gonna get stopped out by like 1 penny. It was 1 penny away from the premium from my stop loss. I didn't move my stop loss. I didn't cut the trade early. It bounced back from being 1 penny away from being stopped to like back break even and slightly green. I cut it most slightly green. Like you have to let the trade play out. Anything in between, a lot of people post this on Twitter. I agree with it too. Anything in between your take profit and your stop loss or trailing stop loss, don't ignore it, but just understand that it's noise right now. You know what destination you want to go to. You don't know what roads you're going to take to that destination. That's really all it is. The price delivery one day might be smoother, it might be very ugly and choppy and harsh and irrational. Focus on the target at hand, use alerts, but let it get there. Let it get to your stop or let it get to your TPs. Don't cut the trade too early. If you find yourself cutting too early, size down for a week. If you're used to going in with 30 contracts, take a week where you're only going with five, but really, really practice, really be diligent. Look at Austin Reeves, man. The Lakers are back within three. That's crazy.
So the
But
target would be here between the FVG between those candles, the 938, no, that to the left. Yeah,
by the
I,
time we'll be here.
yeah. Would that be the first target
No,
that
no.
I should be concentrating if I
The
get caught?
first target, in my opinion, Rog, would be right here. These equal lows. These ones right here. That would be TP1.
So that FVG doesn't count at that point. There is a FVG between those two candles. Yeah, yeah, there. Yeah. I can't hear you if you're talking. Um,
Hold on, you guys can't hear me?
yeah, now we can hear you.
Okay. The confluence for this being like your support and trim spot is these two equal lows right here and here. Underneath these two lows is liquidity, so that's your main like TP or your main target to be hit. These two lows right here. And this could be your support level of if we break through, that should be a good sign in your head to keep holding this trade. If we came into this FVG and we started bouncing, then I would be a little bit worried. But that was a really, really good trade to be had. But if you're having issues really holding the trade, focus on your sizing, right? Go a week where you size down a lot, but you follow your plan. That 1 week you'll learn more about yourself than just going in with regular size and trading how you usually trade. If that makes sense.
Gotcha. So if so when we took the first trade, where would be the stop loss? To the top of the yesterday's highs or the top
So
of today's
the
high?
break of structure trade, had we had gotten in right here, I would have to look at the premium chart of where to keep a stop loss, right? For that instance, let's say the premiums were at like 40 cents. Let's say the low of the day on those premiums was 29. I will keep my stop around like 25. I know it seems steep on the percentage side, but if you think about actual real risk, if you're risking 15 cents a contract, on a trade, 10 contracts is $150, right? I know the percentage looks insane. It looks like whatever, but it's really about how much you actually risking monetarily, right? Percentage is awesome to keep as a metric, but it's really about how many cents on a contract are you willing to give up versus how much are you looking to gain. So for that instance on the break of structure short, I would just keep my stop loss a little bit below the lows of those contracts, if that makes sense.
Gotcha.
Shit. If you guys have any other questions, let me know. I think I might chill and call it a night, to be honest. Just stay fresh for tomorrow. We'll see how we do. But appreciate you guys for the first lesson. It's epic tonight. It's awesome. But we haven't even gotten into the real work yet. So I'll make a homework tab too. I hope you guys can get through with the homework, rock with the homework, and let's
Homework
get it.
tab's done. I put
Oh,
one in.
you guys work goddamn fast. Okay, so first homework assignment will be posted tonight. So I will see you guys tomorrow. You guys are being very sweet and nice, but do your goddamn homework, okay? Please. Professor Rippy's in the building. Take
Appreciate
care.
the insight.
Of
Take care.
course, but I appreciate you all. Have a very blessed night. Take care, everybody. Thank you so much. Thank you.